Hey everyone, it's Rayce Robinson, your favorite Florida mortgage broker, coming to you with the numbers to the end of July here for Central Florida. And really curious to see how things played out with the Fed really trying to slow the market down, increasing rates. And do me a favor, if you're watching the video, like it, subscribe to my channel for all things real estate finance related. So if we jump right into the numbers here, you can see that from July of last year to July of this year, 3,500 homes up to 6,500 homes. That is definitely statistically significant, meaning inventory's doubled really since last year. And you can look here since last month, inventory up about 19.9%. We'll come back to the inventory in a second. Median price, 389,900 from 320 just a year ago. That is crazy, up almost 20%. And it did go down 1.6% from last month. Not a big move, but it is relevant. It's the first time this number has dropped in 6 months. So if we scroll down here to the numbers, these are the current numbers here. This says the average rate's 5.35%, which is true. The inventory has actually started to increase and rates have actually started to fall. We look right here, we have 6,518 homes. If we scroll over here, we can see that there was 3,309 homes closed, which puts us just about 2 months of inventory. Of this 6,518 homes, 5,171 were single-family homes. I thought this was interesting. New listings fell 5,367 to 4,746, so that's a drop from June. And new contracts are down a little bit. Pending went down a little bit. Average days on the market went down just a tad, 20 to 21 days. And sales closed dropped a fair amount from 3793 to 3309. What does all this mean? That's the million-dollar question. So I've been tracking these numbers for quite a while now. It's the first time we've had a significant amount of inventory based on the inventory that we've had. The question is that significant to move the market? So far the answer is not really. Sellers still getting almost 99.9% of asking price. But you're starting to see drops in prices from sellers, and why is that? Because really over the last year, if your neighbor sold his house for 450, you're going to sell your house for 475, right, or 500, and then the houses would appraise as the market moved up. Well, now if your neighbor sold this house for 450, you're probably going to have to sell your house for 450 because the market has changed and some of the competition has been stripped out with the more inventory, and that's a trend I think you're going to see continue. Now, the Fed has not really been that successful in driving up interest rates because the bond market is really still predicting a recession sometime next year. And so even though the Fed is pushing up the Fed funds rate, interest rates are actually coming down because they are pricing in that recession. So I really think you're going to see rates stabilize between that 5 and 5.5% and maybe dip under 5%. I also think next year you're going to see rates decrease below 5% and lower. So we'll just see. I don't have a crystal ball. Mine's broken in the shop. So some of the interesting things is we have 2 months of inventory. So what is the opportunity in this market? One of the things I like to look at is a lot of first-time home buyers have been stuck on the sidelines. We're seeing FHA buyers getting back into the game, VA buyers, people with not as big a down payment. Remember, you can always refinance later for a lower rate. I still love that Warren Buffett quote where he says, be fearful when people are greedy and greedy when people are fearful. Right now is a great time to be getting in the market. Fannie, Freddie, Zillow, all these big entities, none of them predicting any type of major price depreciation, which is obviously what some people are concerned about. And again, I can't promise anything, I can't give financial advice, but the reason they're all predicting that is because there's really nowhere for that inventory to come from. If sellers don't need to sell, they've got low rates, low payments, there's no way to get this forced selling that we got, say back in the Great Recession. So you're really just seeing, you can see that the listings dropped where sellers just say, hey, we just won't sell. That's really keeping a damper on inventory even though demand is falling as the Fed is decreasing demands. Something interesting to play out, I think we definitely get the 3 months inventory. Past that, we're gonna have to see. That's really getting homes up to 8,000 homes. That's really technically not a buyer's market. Buyer's market, some people say 6 months. I don't know the real number. To me, a buyer's market is when the buyers are dictating the terms, and we haven't gotten to that point yet. These are the current numbers as they come out. The numbers I'm really paying attention to, sales closed. Obviously, everyone's paying attention to listings, right, or inventory, amount of inventory. What I'm really looking at is average days on market, sales to price listing ratios, meaning are sellers getting their prices they're asking for. Right now, it's almost 99.9%. The answer to that is a resounding yes. And sales closed dropping, meaning demand is dropping as Fed is making money more expensive, which is to be expected. So again, for me as a lender, mortgage person, it's really nice if it was more in favor of buyers, because I work with buyers, and the more buyers have an advantage to buy, the more they will. And I think right now is a good time to be thinking about it. Again, hopefully that helps. If you have any questions on this, the numbers, there are more programs than ever to help buyers become homeowners than I've seen in a long time. So if you have any questions on this, loan programs, or anything I can do to help at all, let me know. I'd love to help. With that, make it a great day. I'll talk to you soon.